Hello, everyone. Welcome to our CID Build Your E&O book, Hot Classes of Business. My name is Anae Augustini. I'm CEO of CID Insurance Programs. Myself and Lexi Johnson, who's our professional lines underwriter, will be teaching our course today. So you're lucky to have Lexi, and I'm going to throw my 2 cents in there too. So say hello, Lexi.
Good morning, everyone.
And then last but not least, we have Jacob Cole, who's our marketing coordinator, and he makes sure that everything runs smoothly for all of our marketing. So he's just here for our webinar today. Say hello, Jacob.
Hello, everyone.
Okay, so without further ado, everybody pretty much knows the logistics by now, but there's probably many of you that have never attended our webinars before, but you will be on mute, able to hear, but not speak. But again, your voice is really important to us, so please pose your questions in the chat room at any time throughout the webinar, and we'll answer them as we go through the webinar. There will be a short survey. We'd really love your feedback there too. We're always looking for new innovative ideas and things that you want to learn, because we're always trying to put more educational material forward for you. So without further ado, let's see what we're going to be talking about today. What are our objectives? Well, we're going to spend a little time on the basics of E&O, not a lot, but just a little reminder, difference between GL and E&O, things like that. We're going to be talking about trending professional classes, and that's really important. You know, the post-COVID chaos, it's really trying to identify where you've got companies that survived and are doing well, and that's the direction you want to go. We're going to also do a little better understand, the professional key underwriting criteria, and we're going to do it by class of business, so that will make it a little bit more specific for you. And then we're also going to learn important coverages for different professional classes, so that they are, each different class of business needs different coverages. So we're going to focus on a few today, and we'll do more going into the future with other webinars. So let's get started. I'm going to turn it over to Lexi.
Okay, thank you, Anae, and thank you so much for joining. We're really excited to have you. So we're going to begin with technology. So when we're talking about technology, first, who do we target? Who needs technology E&O? So this is any individual or companies providing technology services to others. And I know that seems broad, but sometimes it is that simple. What is really interesting about the tech world is that there's a lot of things technology professionals can get involved in, especially since technology is changing so rapidly. We constantly see many innovative things that professionals are doing, and we live in a tech world, so it's very common. So when we talk about coverage with technology professionals, we have E&O, we have media liability, and cyber liability. I'm not going to go into great detail of each coverage. We have specifically pre-recorded technology webinars on our website that you can listen to that go into much detail of each, but I'm going to go over the basics. So first, when it comes to E&O, this is just a client relies on the expertise of a professional. So if they rely on your advice to make decisions, then they need E&O. And due to this relationship, the client can suffer financial loss. So the key is financial loss. If the client feels a financial loss can be avoided, then a claim can arise. So that's your basic E&O. So there's no bodily injury or property damage that is a GL form, but we can see a lot of E&O claims when it comes to technology professionals. So for example, let's say you hire someone to design your website, and you have a contract with them to have the work completed by December 2nd, when you plan on launching a huge product. But then December 2nd comes and the work is incomplete, and you're unable to launch your product. This would cause your business a financial loss. So just wanted to give you an example on a common E&O claim within the tech world. So we're going to go next to media liability. Okay, media liability. It is a really important coverage for technology professionals. When you initially hear media liability, we may think of, films or artistic work, but technology professionals do have exposure to media liability as they can have copyright and trademark infringement allegations. So an example of this would be, let's say a website designer, thought they bought the rights to an image and they didn't. So any type of computer consultant, web design, anybody that does anything relatively creative, you definitely want to make sure that your insured has media liability in place. And then moving to cyber liability. Cyber is so prevalent right now because regulations are constantly emerging. And what does it cover? It basically covers if they cause a breach on somebody's system or if they themselves have a breach on their own system. And something to know, actually, when we're talking about tech E&O is that we do have carriers that will package the E&O, the media, and the cyber liability together on a technology professional policy. And this way it avoids any gray areas. So we do have that available. And then I wanted to go into our eligible classes next.
I have a quick question for you, Lexi. Can you add the GL coverage?
So yes, we do have carriers that can add the GL, so that is an option as well. So yeah, if you have any questions regarding the GL, you can definitely reach out to me, and we do have that option available. Okay, so here's some eligible classes. I'm not going to read all of these, but this is just a reference point. It definitely doesn't cover everything, but to name a few, basically anything with software. So we have our custom software development. We have application service providers, which has to do with, applications on your phone, and then everything with network. So your system network, computer support, and then also there's managed service providers, which is like your outsourced IT. And there's been actually a pretty high demand for this. So this just gives you an idea of the type of risks that you would submit for a tech E&O. And then I want to go into our targeted classifications. So these are all our targeted classes, and our hot classes of business are in green. This is what is selling. So for example, we have help desk. There's been a lot of website design and development, especially over the past year with small businesses. They've had to adapt with what has happened in the world. And to give you an example, like restaurants, they have to start offering online ordering. And they may have not had that capability before. So there's a demand with creating QR codes and so on. So there's been a huge demand for website designers to help these businesses. And then here also you can see consulting. So I put this on here because classes might be placed under a consultant where you can also get the GL and you can get a BOB. But you would have to purchase a cyber policy separately. So I just wanted to make that, put that out there. And then the application that we request for a tech E&O. So here's the application. You're probably familiar with it already. You can find it on our website at cidinsurance.com. The top portion of the application is very general. So the applicant's name, address, and I want to point this out because a lot of times this is overlooked, but the website, this is actually one of the best ways for us to figure out what they are doing if they have an up and running website. So make sure to provide this because from an underwriting perspective, this is actually one of the first things that we look for, and we go on and read their services and their products and what they're doing. So I highlighted description of operations. This is really how we capture what they're doing, especially if they don't have a website. So the best thing you could do is type in a detailed description of the operations, and below you'll see a list of different a list of different services that you can check off that they might be involved in. Even if it's 1%, I just recommend checking it. But if you're not sure what to pick, especially because terminology in the tech world keeps changing, then I highly recommend to include it in the description of operations. And this is a class that is rated on revenue, so it's really important to provide your total projected revenue, which is towards the bottom. And I also want to mention, we do have an option for our agents to receive a phone or web quote through USLI, which is United States Liability Insurance, who is a hot market for tech risks. So you can do a phone quote, which takes less than 5 minutes. And once it's completed, that quote will be sent to you, and then a copy will be sent to our office. So we have a lot of agents that utilize this, as it's a quick way to quote the risk and also send terms to your insured. And then moving on to the next slide, so hard stops. Of course, our markets have underwriting guidelines when it comes to writing tech risks, and this section of the application helps us navigate if a risk is eligible or ineligible for our market. So this portion of the application is very important. Obviously, a hard stop would be anything that's high hazard. So from an underwriting perspective, the carrier is always going to be looking at the areas of concern. And just to give an example, one of them being bodily injury. So the question may be, can someone get seriously hurt from these operations? And some may ask, it's just a tech consultant. How can there be serious damage? But I'll give you an example. We had one risk that actually was a smart artificial intelligence surveillance camera. So it's specifically designed for pools. So it alerts you and then sets off alarms when someone is distressed or having a difficult time in the pool. So in other words, you can think of it as a lifeguard. But this would be a hard no, because, what if it doesn't work and someone is under distress? So this is just one example that our carriers may be looking at from their perspective. So make sure you complete the section of the application so that we know, where we try to say we know like what they're doing and also what could be a concern, an area of concern. And so I hope the short explanation of technology was helpful to you. I'm going to pass it on to Anae, who will go over property management.
Great information, Lexi. So I'm going to talk about property management. This is another hot class of business for professional liability. Do we have a question? Lexi, we can go back. Question, credit card. If the insured putting shopping carts on websites, will this exclude them?
That may be difficult for me to answer just because it really depends on the entire business and also, their operations.
We should have them send you an email.
Yeah, if you can send me an email, I would be happy to respond.
Yes, give us a little more information. Yeah.
Mm-hmm.
That'd be great. It doesn't look, it looks like something that we might be able to do. We just would have to have more information. Thanks for asking the question. Okay, so on to property management. This is another hot class of professional class. This is, they've stayed in business during COVID, didn't shut down, and many of them stayed in their offices, a lot of them. We write a lot of these, and that's pretty much why we know really the status of a lot of these companies. It's all types of management of apartments, condo, homeowners associations, vacation properties, mobile home parks, office buildings, retail buildings, industrial, self-storage. There's a wide variety. There's a lot that you can dig your teeth into here. And that's where these management companies will manage. Most of them will either specialize in a certain area, such as condos and homeowners associations, maybe apartments and single-family homes. That's your much more traditional property management. and some of them will be strictly commercial, some of them will be strictly vacation. So, but they're usually specialists in some area, and not usually a jack of all trades. So, this is an area that they've stayed in business, they've done well, and they're financially stable. So, a good one to go after. In addition, and I'll talk a little bit more about this, it's a great point of sale opportunity to insure all the properties they manage. So I'll talk a little bit more. So I'm just setting you up for that a little bit later. So again, there's another opportunity here. There's a lot of premium on the table usually with property management companies. We're talking about professional liability, but Lexi can take care of all of the needs of that management company for you because it's a professional class, and she writes all of those coverages for them. So today's about professional liability, and that's that E&O policy they need. But they also need tenant discrimination coverage, which is really, an allegation of any third party alleging discrimination. Maybe in someone that submitted an application for leasing a place that could be considered under tenant discrimination coverage. And then, of course, they have employees. They need employment practices liability, and in some cases, depending on the company and how big it is, they will need a directors and officers liability policy. This is a class of business that really needs a cyber liability policy, and of course, general liability and property for the offices that they house their managers in. In addition, they're overseeing all the funds of the association, so they would need fidelity coverage. And again, if they have employees, just like EPL insurance, they will need workers' comp as well. So those are the important coverages that you would not want to miss. But you can see, even on a small company, there's a lot of premium there. So this is a class that I really recommend going after, and it's you can gather a lot of information about the types of businesses in whatever area that you want to look at. So let's talk about the exposures that these management companies face. They're exposed to litigation by losses caused by their sole negligence or named along with the property owner in a lawsuit connected to the premise of the managed property. So there's two areas there. One, that management company could make a mistake, an error on their own, and that would they would be sued by most likely the property owner for sole negligence that they caused a problem. The management company can also be named in a lawsuit along with the property owner, where another, like maybe someone who rented the place, was suing both of them for whatever they deemed to be an error on that caused financial damage to the tenant. So it has to be based. The sole negligence would be the property management company. If not, they would definitely want to look at utilizing, some type of indemnity agreement with the client, the property owner, so that if they're just named along with, that they would have some ability to use the policy of the unit owner that were at the premise property. Are the exposures different based on the type of properties management? Yes, they are. They can be like association management, homeowner association management does not. They're not leasing any of the properties. They're just managing a law, at the direction of the board of directors and facilitating the board's decisions. But a traditional property management company, they're going to be doing leasing. They're actually going to be more involved and directly involved in the repair that needed at the properties of their clients. So it does change. And then what types of claims do you typically see in this industry? There's a wide variety. Many of them on the E&O side are definitely, a lot of them end up being bodily injury based, but because we know that E&O, and so that would be a GL loss, but we know on the E&O, it's an allegation that caused economic damage to a client, their client, and that could be that they failed to maintain the property. And some of those exposures are listed below on your screen there. The value of the property was diminished because they failed to maintain the property as agreed to. They may have wrongfully evicted someone, and it caused economic damage to someone. Of course, administrative and financial errors are part of that, and regulatory compliance and libel and slander become a part of that as well. That's personal liability. So let's take a look at the application. Again, this is most professional liability policies will have they're rated based on revenues, and they may have other rating components, but revenues is always one of the driving factors. And in this case, you can see on the application that they're asking for revenues for the different types of properties you would manage. And by the way, most of these professional liability policies are not auditable, but so it's on the honor system for people to fill out the information accurate as requested on the app. And again, the app becomes part of the part of the policy, so that information is ingrained into the policy. All those answers that your client would give on that application. So it's right. It could come back to haunt them later if the information is not accurate. At the time of a claim is what it really gets back. So look at all these different types of properties that can be managed. There are different rating factors for each of them. So some of them may be more. The rating factor may be higher that for office buildings, industrial manufacturing warehouses than it is for condo associations. So that's pretty much gives you an idea. There are a couple hard stops, and not too many to be concerned about, but I'll tell you the one that really is, I don't think we have any carriers that are interested in being involved in any management company that is doing services way outside of the property management industry. That would be someone that might be working with a developer, or developing their own properties, building and developing, or closely involved with a developer on that end of things. Generally, carriers don't want to get involved with developers at all, because usually when they get sued, everyone that is involved with that developer gets sued, and so no one wants to be involved in those lawsuits. So that's it in a nutshell. There aren't too many other they're going to look at managing foreclosed properties and receivership services. Are they doing services unrelated to property management that really actually need a different type of professional liability policy to cover the exposure? Again, you could a carrier might be interested, but you might need two policies in order to accomplish that. Here's that cross-sell opportunity I mentioned earlier. This is a great way. If you become, the expert for the principal of a management company, it's a great opportunity to go in and do education with the managers of the properties, and it's a great way to cross-sell all of their apartment owner clientele. Excuse me. The way I say to do it is I say go in, and say, hey, now that we've taken a look at your insurance, let's take a look at your properties to make sure that they're insured properly. And usually they'll let you, have a list or go through their files and, take a closer look at their in insurance information, and then give you an opportunity to quote it. You get a whole X-date list out of it and become the expert for that particular management company. And you can do it with more than one management company. So anyways, there's a lot of opportunity to do personal lines, single family homes management. There's you may be insuring condos. You might like unit owner condos, and you could insure community associations and then write all the unit owner condos inside those community associations. And that's a drill down from the management company to the community association to writing all the individual condo units within each. So that's a great cross-sell opportunity. And then I think that probably covers most of it. Let me know if you have any questions about this.
Okay,
that's it on property management. I'll send it back to Lexi.
Okay, so we're going to go into our next hot class, which is allied healthcare. So what is allied healthcare? This can be very confusing for brokers. Allied healthcare includes many of the well-known non-nurse, non-physician care providers. So we define allied healthcare, and this covers a huge bucket and a variety of classes. I provided a list of our targeted classes that we have markets for. So on the left side, you'll see social service organizations, your residential risks, which are group homes, halfway houses, hospice, shelters, long-term care facilities. And then on the right side, you'll see, a different variety of classes that still fall under allied healthcare. So we have athletic trainer, physical therapy, day spa, dietitian. So these are all classes that we do have carriers for that will write them. These are just some prohibited risks that we've seen come through. So your general hospitals, acupuncturist, abortion clinic, those are classes that we do not have a carrier for. And if we go next, why should we write allied healthcare? Why is this a hot class right now? Especially in this day and age, there are far more grants and people providing these type of services. So it is, high retention long-term, increase in social services offered. There is stability. Normally, these accounts are not shopped every year for this type of book, so it does hold a good retention, good stability. These type of services are here to stay. So it is really important, as a knowledgeable broker, that you can have a good understanding of allied healthcare so that you too can help your insured get the right coverage. And then next, we're going to jump into the application. So this is just a general application that we use for these type of risks. Of course, you'll see your basics, so applicant name, address, and to reiterate, make sure to provide a full description of services. For allied healthcare, the rating factor can vary. As I mentioned, it is a huge bucket, so it can be based on number of beds, employee count, revenue. It really just depends on, what the risk is. So for an example, an athletic trainer, they're going to be rated on employee count. So, and then something I want to mention again for the revenue, make sure you put the projected next 12-month revenue. That is something that carriers will look for. And in the next slide, I'm going to show you an example of a residential risk. So as I mentioned earlier, residential risks, they can include group homes, halfway houses, assisted living and independent living, long-term care facilities, et cetera. But you'll see this is a residential risk application where it is specifically asking about the number of licensed beds and occupied beds. And that is because the rating factor is based on number of beds. So it will be more specific towards that. The carrier is also going to ask specific staffing questions, and that is because, with inadequate staffing, it actually results in an automatic decline. So that is an important factor for underwriting to review. And I also included, the required documents that carriers require when quoting residential risks. And this is about the same across the board with every carrier. The underwriter will review the state inspection. We actually recently had a submission decline because they had a poor state inspection. So that is something that is factored in. So when you're working with your insured, just make sure to gather all this information up front so that the quoting process can be very easy and quick. And there are many services nowadays that will actually list residential care facilities in your area. So that you can see coverage for. So you can always look that up if you want to go after that coverage. And then what coverages do we offer on allied healthcare? So we have carriers that will write the E&O and also the general liability. We can also entertain the property. It may be limited based on risk and also state, but we do have carriers that will write it. Again, we love to write any allied healthcare risks that may cross your desk because we have also our general allied healthcare application online. And if you're specifically looking for home healthcare or, as I mentioned, the residential risk, we also have specifically designed applications for those type of risks. So you can always email me and I'd be happy to send it over. But we could write small, medium, large size risks, limits up to $2 million and $4 million, and then just some policy deductibles that you can see. So if you have any questions on this, as I mentioned, please reach out to me. I'd be more than happy to answer any questions you have.
Great, Lexi. Good information. So let's talk about some takeaways. We're just going to close with this, which is professional requires a good understanding of the risk. So that is something. It's not just like a grocery store or the mechanic or the garage. They're doing sometimes a wide variety and more complicated kind of services that are more administrative oriented. And so it's important to take the time to understand the risks. There are many different classes of professionals. We've only tapped into 3 of them today, so it's important to understand. And Lexi is here for you to answer questions when you come across a class that you're not familiar with or are not quite understanding. She can point you in the right direction. We have many E&O markets that will provide competitive quotes. And if you're new to E&O, you should go on our website and watch our recorded E&O webinars on our site. There's lots of E&O beginner workshops, advanced workshops on E&O, and so that's great. There's also EPL, and cyber liability. So there's a special one on technology, E&O. So there's a lot of great ways that we can help you and lots of tools on our website. So I want to thank you for joining us. And then here's Lexi's information. If you please feel free to contact her directly with any questions. We'd love to do business with you. And our brokers rave about us. We get referrals all the time. So I don't think you'd be sorry. Check out our website at cidinsurance.com. That in itself, you'll find a lot of tools. And let us know if you have any, we can certainly set up a one-on-one with your agency to go over any specifics that you guys would like to learn more about. And then submit your applications to submissions@cidinsurance.com. And you can always copy Lexi at the same time so she makes sure that your submission gets directly to her. Thank you guys for joining us. Take care.